In this video, we're going to look at some mathematical calculations around interest rates. We have another video that specifically covers the rule of 72, but here we're going to look at really what does an interest rate mean? What am I getting with an interest rate, and how does this apply to some of the mathematical equations you might have to do here? So if I have, just to start with an easy number, $100, and I want to say I have 4% of that $100. Really what that means is that I'm taking $100 times 4%. You can enter it into a calculator that way, and you would see that that gives you $4. Okay? Now, if I'm getting compounding growth on that $100, that means I'm essentially getting $100 and I'm taking that 4%, get that $4, and I'm going to reinvest it back into that $100. So that means I actually will go from having $100 to having, in this case we can see 100 plus that extra $4, I'll have $104. Now there are a couple of ways that we can solve that. We saw here that we did 100 times 4%. We got that $4 and we just added it back in. But there are other ways to do this. So I could also take, and this is easier ways to do this, especially when you have more complicated numbers. You could take $100 times 1.04. Okay, $100 times 1 is basically just going to give me $100 again. We know that. When I add that extra 0.04, that's really what a percent means. When we use that term percent, it really means 4 out of 100. 4% is 4 out of 100. That's literally the case. That's exactly where that terminology comes from. So in this case, the 1 would just duplicate the original $100. That 0.04 is going to add that in. If you type that into your calculator that way, or if you do that math yourself instinctively, you're going to get $104. Another way that you might do this math in your calculator is you might do most calculators, not all calculators, bookkeeping calculators are not strong at this, but if you do 100 plus 4%, you're also going to get $104. You just type it exactly like that into your calculator, 100 plus 4% and then the equals sign, and you will get $104. So this is a useful way to do it. This is the way that I generally do it myself, especially when you have a longer series of equations to run. So let's say I don't have something so simple. Let's say that I have $1,000 with a 3.5% return over 5 years. Well, this is where I can make this pretty easy on myself by just using this same sequence of numbers. I can say 1,000 plus 3.5% equals, and that will give me my year 1 value. And then I can add another 3.5%, and that will give me my year 2 value. And then I can add another 3.5%, and that will give me my year 3 value. And then I can add another 3.5%, and that will give me my year 4 value. And then I can add another 3.5%. You can just keep doing this over and over and over again in your calculator, and it would be very straightforward. That last will give me my year 5 value. This would be a very easy calculation to do if you had access to a financial calculator, but many financial services exams, including the life insurance exam, do not allow the use of a financial calculator, and it is a little bit of a chore to get to learn it. Well worth it once you do, but quite a bit of work. So from that first year, we'd have $1,035, and then from the next year, we just keep adding that 3.5%, hitting the equal sign, and we get $1,071.23. And then we just keep going, same thing, plus 3.5%, and you'll get $1,108.72, and keep going. Nothing to it here. $1,147.52, and keep going. And we'll end up at $1,187.69 by time all is said and done. That's our answer. So that's really some fairly simple calculations around interest rates, just to maybe help you to understand a concept that, especially if you haven't done it in a while, or if it's something that's not intuitive to you, maybe that'll help you to understand that bit of math. So I hope that's been useful. Thanks very much.